see. So to start us off tonight, I am going to use our collect from yesterday. So because I think it's a beautiful one. So I want to start off with that. So let us pray. Oh God, you have prepared for those who love you such good things as surpass our understanding. Pour into our hearts such love towards you that we, loving you in all things and above all things, may obtain your promises, which exceed all that we can desire. Through Jesus Christ our Lord, who lives and reigns with you in the Holy Spirit, one God, forever and ever. Amen.
Amen.
So tonight, I'm curious as we get started here, has anybody embarked upon trying to do their sort of coordination calculations between the PPP and the ERC yet? Any brave souls?
No. Phyllis, I'm sitting in on these sessions, which are wonderful, but kind of Wayne, our other warden, is really doing calculations and things like that. And quite frankly, I'm still kind of lost.
So. Well, I'm hopeful that this will be helpful. And, I did, one of our participants in the morning meeting was willing to share some of his data to give us some numbers to start from and kind of walk through. So we put it into the form of a spreadsheet, which hopefully you'll find helpful. I'm going to go ahead and share my screen with it on there. So, and I think what I'm going to try to do is see if I can make it, let's see where we at here. Let's try to do 100. How is that for you to be able to read? Can you see that well? I'm seeing nods and thumbs up. Okay. I guess, Michelle, if you have any problem, I don't know if you're on a phone or you're on a computer, but if you're having any problems, seeing or hearing or anything, just feel free to unmute yourself and let me know, okay? Alrighty. So let me go through. So in this particular case, this was a church that had a 2020 PPP loan that was effective May 5th of 2020. And so their covered period started as of that date. And they chose what's indicated or what's meant to be indicated here by some of the shading in the spreadsheet. You can see this blue shading up here, that they chose a 24-week forgiveness period. And that may have had something to do also with, with their, with the being able to, with their deadline date, they probably wanted to extend that out as long as they could. However, they only needed to use the period from May, June, and July in order to get to the point where they had enough costs to be able to get forgiveness. So you can see the amount of their loan was $26,672. And so in May, they covered $10,526 worth of that. In June, they covered another $11,180. So you can see the cumulative totals down here. And then by July, they had exceeded 26,672 that they needed to achieve forgiveness of the loan. So they, even though they were declaring a 24-week forgiveness period, they only had to use the costs from these 3 months, and not even the complete costs from those 3 months, to achieve their forgiveness. Which means that so the top half of the spreadsheet is basically the PPP loan summary portion. Okay. And then the bottom portion of the sheet is where they were tracking what would then be left for them to be able to claim against the employee retention credit. And so in this, and we're taking this, as you can see, it's divided up quarter by quarter because that's how the employee retention credit works. And one of the things that I really like about the example is the fact that, you know, for most of us, the period that we're using to achieve forgiveness on our PPP loan is going to straddle calendar quarters. You know, if there's anybody who has one that exactly fits within a calendar quarter, that's going to be rare, and they're lucky. But for most of us, we're going to have straddling calendar quarters. So there's going to be part of, you know, pieces of quarters that are still eligible for the employee retention credit, even when you've got PPP stuff going on within that same quarter. So I think this example really kind of demonstrates that. And so as we're moving through 2020, bearing in mind that for 2020, our limitation per employee is $10,000 for the entire year. Okay, we have to keep that in mind. As we look at the second quarter of 2020 in this particular example, we can see that the month of April didn't come into play at all for the PPP loan because the loan wasn't even effective until May. So any of the payroll and all of the payroll in April is eligible to be used towards the employee retention credit. And so the other thing that you may notice in this particular example is up here in the line for the rector, the amount is higher than it is down at the bottom. So it's higher for the PPP loan than it is for the employee retention credit, because for the employee retention credit, pension doesn't count as a cost that you can use towards the credit. As you'll recall, pension costs do count when you're looking for PPP loan forgiveness. So that's why the amounts are a bit different. But in the month of April, the rector's 941 wages and housing and the medical premiums, the healthcare premiums, are all eligible in April. And this is the amount that that applies for the month of April. And then they have an organist and an admin at the rates that you see here for a total of, in April, of $9,228.43. And for 2020, the applicable percentage is 50%. So the amount of the employee retention credit that would be available in the second quarter, excuse me, for this particular congregation would be $4,614.22. So what would then happen is that this congregation would amend their 941 form for the second quarter of 2020. And because all of the taxes had already been paid in, then they would be eligible for a refund. Excuse me, I'm sorry, I don't know something must be caught in my throat, but they would be eligible for a refund of that money, or they could push that credit forward into subsequent quarters all the way through the end of the year if they wanted to, and actually even into 2021 if they wanted to, or they could claim the refund immediately. So, and in order to do that, they would be working with their payroll company. This particular congregation happens to use Paychex. And so they would work with their payroll company in order to make that happen. And for the worksheet, the person who had prepared it had put down at the bottom an indication of the withholdings that had been taken for all of these folks on on their pay. So you can see that the amount of the credit in April would have exceeded all of the withholdings in any case. But it really, in the quarters where you're going backwards, into 2020, and then even in the first quarter of 2021, that part doesn't really matter so much because you've already covered, your entire payroll tax liability for that particular quarter. You made federal tax deposits, or perhaps you paid it in with your 941 form. But because you've fully covered your liability in all of these periods, that means that the amount of credit that you're calculating is fully refundable to you because you don't have any outstanding liability for the quarter. That'll change once we get forward looking, into the quarters in 2021 where we can look ahead. But for the quarters in 2020, it would definitely be applicable. So then we would move into the second quarter of 2020. And we can see here that the month of July was still a part of the forgiveness of the PPP loan. And once, what I would do to refine this even a little bit further from the person who prepared it is, if it were me, I would actually even be splitting July into the part of July that I needed to get up to my forgiveness amount, and the part that I didn't need, and that could therefore be, moved forward into or applied towards employee retention credit. In this particular case, again, it's not going to matter a whole heck of a lot because of the $10,000 per year limitation on each employee's wages. So, you could see here that in August, if we scroll down to now the employee retention credit section, because now August and September are fully available for the employee retention credit. And as of August, you're going to use up the maximum amount for the rector. Okay, so if you take these two numbers together, you would see that totals $10,000. So because your rector is already being fully utilized anyway, the amount, that you would have, you don't really need to use him in July at all. And the amount that you would have for your organist and your admin outside of the amount for the PPP loan is going to be fairly minimal. So it's not going to, for simplicity's sake, I've just left this as it is. So here, as I mentioned, you've got the amount that takes your rector up to the $10,000 max. And obviously you still have full availability in August and September for your organist and your admin. So that would take that to a total credit of, or a total eligible payroll costs of $5,631.57. Again, the credit rate is 50%. So the credit in the third quarter of 2020 is going to be $2,815.79. Again, fully refundable, or if so desired, could be pushed forward into the new year. And then again, in the fourth quarter of 2020, again, we're way outside the covered period now for the PPP. We really don't have to worry about that at all, but we've already maxed out the amount that the rector can receive or can be credited toward the credit, the ERC. So we have just the organist and the admin left that we could actually take the credit for. And so that means that the eligible payroll costs in the fourth quarter would be $5,100. 50% of that is going to be $2,550. But, here again, you can see that even with even with having taken the forgiveness on the PPP loan, that you've got what, 2,500, 2,800 is 5,300. So plus 4,600, you've got about $10,000 worth of employee retention credit for this particular example. That's fully refundable to this congregation. So it's like getting $10,000 back in your pocket. So it's a significant credit, for this particular group. So then, before I move on into the 2021 numbers, does anybody have any questions about what I just went through?
Phyllis, this is Mary Duke. Can you go back and explain why the ERC, the rate is 50%? Now I see
So
it's
that-
going up to 70.
Well, that's in 2021, and that's my, I forgot to do this. I was going through this pretty quickly earlier on, and I forgot to change the 2021 rates. But that rate was established by, first, the CARES Act in 2020 established it at 50%. And then when they updated it in, at the end of December of 2020, to allow it to be used in conjunction with the PPP. And one of the other things they did was increase the rate for 2021 to 70%.
Okay.
So they are different rates for different years. Any other questions on?
So just to clear, it's 10,000 max per employee, but in 2020 it was 50%.
Right.
Was the rate of the credit. Okay.
Yep. Yeah. So yeah, in 2020, it's 10,000 per year per employee max. And the credit rate is 50% of the eligible payroll costs, which do include your health care.
So yeah,
and it
so in
doesn't-
2020 you could do up to, you could get a credit of up to $5,000 per employee if you had the appropriate cost.
That's correct. Yep. Yeah.
Now, is the clergy always considered part of the salary and for ERC?
It should be, yeah, because as long as you've got, what I want to say, consistent clergy. In other words, it's not, supply priests are paid on 1099s, and they were not
Right.
eligible for PPP, and they're not eligible for this. But as long as you've got someone who is a consistent clergy presence being paid on a W-2, yes, they are eligible.
Okay.
Any other questions?
I just have one, because we deal with Provident Bank as our main bank. And when we went to do the PPP, we went to Bank of Princeton. And because they had better availability and stuff.
Right.
So we got a special account in Bank of Princeton for the
Mhm.
PPP. We paid things out of that one. When I do do I have to, I really basically put all the money into the PPP into that account. They did.
Mm-hmm.
And spend it out and stuff. Now we do forgiveness. Can I commingle with the other Provident account, or I'm trying to understand how to do this right so they get the best tax benefit and stuff. So
Yeah, absolutely. You can. I mean, you can, because for your forgiveness, when you're looking at your forgiveness calculations, you're still, your utilities and things like that are obviously still coming out of your Provident account, as well as perhaps some of your other payroll costs may have been,
Right.
And so you can accumulate that all together when you're looking for your forgiveness. And
so you can commingle it. It's just like, okay, I have two bank accounts at the time, so then I could say, okay, this is how much I spent and stuff for the PPP.
Right. I mean, I guess the thing there is that it was, the intent would have been that you would have used the Bank of Princeton account and basically sort of used it up on payroll costs, to make sure that you were, that you're actually demonstrating even it by your use of that account that you were, that all of that money was going towards forgivable, costs. But the fact that you have other costs even over and above that you're paying out of your Provident account, you can certainly include those as well. They don't care which account it came from.
Okay, just trying to understand all these different things.
When it comes to your payroll costs, I mean, I think the one place where you're going to be, mostly looking for the substantiation, whether it's for forgiveness or for the ERC, is your payroll records. you know,
Right.
so whether they're your own payroll records or they're being kept by your, you know, your payroll company, those are the records that, you know, are probably going to be the most helpful in substantiation of the payroll portion of either one of these particular programs.
For the
And then obvious,
ERC, for the ERC, do
Yes.
we have to go through a bank, or is this directly with
no, this is direct.
the? I guess it's the IRS or Treasury. I guess filing for the credit.
Right. You file for the credit on the 941 form. You amend your 941 form to file for the credit, or to file to, you know, to get the refund of the credit. And that's where you're, again, a lot of us who have payroll companies are working with payroll companies in order to do that. So, but that's exactly how the credit works. So, yep, no banks, no middlemen, just straight between you and the IRS. How long that takes, who knows? But I mean, hey, you know, at least if we know it's coming back, it's, you know, we're in better
What I
shape than we were
suggested,
before.
I thought about is get a 941 with all these different things on there from this year. Fill it in the way you want it to look from last year, and then do the subtraction on the right places on the X form or whatever that form is that could change form or something.
Mm-hmm.
Because that's
Do
what
you
they
do your,
usually.
uh-huh.
I mean, I think it's the 941X or whatever that thing is that, you know, they change form or revision form.
Right. Yeah, the
And they
amendment
just want to know
form.
your revisions. So
Yeah, exactly. And basically the one thing that you're revising is a line that actually didn't exist on the 941 form when you first filed it, which is the line that you used to declare the credit. You know, I think right now, and I don't have a 941 up in front of me, but I thought it was like line 13 or something like that. I can't remember. That was specifically for the you know, for the credit, you know, because basically what you're doing, I mean, you're doing all of your calculations to figure out how much of a credit you get, but what you're really doing on the 941 form is putting one number in there, and that's the number for that quarter. You know, so like in this particular example here, if I was amending this fourth quarter of 2020 941 form, I would just be putting in on the appropriate line number, I'd be putting in $2,550 worth of credit. So you know how, like when you go through the 941 form, the first things that you have to do is calculate your liability, you know, so you're calculating the Social Security, the Medicare, the federal tax withholding, you're totaling all of that up. And then you're subtracting the amounts that you actually paid in if you paid in with federal tax deposits. And this credit actually becomes one more subtraction from the amount of the liability. So when you're amending the 941 form, because you would have already paid in the exact amount that you had due, now you're subtracting this additional amount here, which is why that's exactly the amount of the credit that you're going to get refunded. So that's basically the way that it works when you're doing the 941 form. Makes sense? Kind of.
Yeah.
In theory, right? So, so then moving on into 2021. So now we're starting over and remembering that in 2021, in addition to the credit now being 70%, the limitations have also been greatly expanded from $10,000 per employee per year to $10,000 per employee per quarter, or $40,000 per employee per year. So now you can see on our line here where we have our priests costs, eligible costs, that, you know, we still hit our limit every quarter. Okay. But once we hit our limit this quarter, then when we move into the next quarter, we get to start over again and take another $10,000. Same thing for the third quarter, same thing for the fourth quarter. So that makes a tremendous difference in the amount of credit that we can apply for. So we've got the total here for the first quarter then ends up being $15,100 of eligible costs. And at 70%, that amount is $10,570. And that basically, in this particular example, repeats itself every quarter because nothing changes. However, what will change is here. So now this is a church that has applied for and received another PPP loan, a second round loan, which was effective as of March 1st. So then what will happen up here is that their anticipated forgiveness period would be pretty much similar to what it was before. And so during the forgiveness period of time here, we would then not be taking any of the amount of the credit, the employee retention credit. So I would be changing this to zero it out and that to zero it out. And then also here in April, assuming that it takes, the same amount of time for them to achieve forgiveness as it did before. But then we would also be able to, in June, add back in our rector's wages because that would be then fully available, and he would not have hit, or she actually in this case would not have hit the $10,000 quarterly limit yet. So that would change slightly the amounts in these two quarters, because this period up here, we would be using those payroll costs to achieve forgiveness on the PPP loan. So that's how that would impact these particular calculations. So in the first quarter, we would have we would still have, because we would have already hit the limit for the priest anyway here, so that the fact that we couldn't use March doesn't even hurt us. Then we've got January and February for the organist and the admin, which then would bring us to about a $9,350 credit for the first quarter. Second quarter would be $6,619.50. And then into the third and fourth quarters, we go to the full $10,570 credit that would be available. So, I mean, in this particular case, using these numbers, the employee retention, the amount that this congregation will achieve, we'll see from the employee retention tax credit, or the employee retention credit, will be actually more than their PPP loan. And that's, again, why this is such an important consideration for so many of us to really kind of walk through these calculations and do. So just to do this really quickly, if we did that, plus that, plus that, plus that, it's $37,108.70 that this congregation will get in 2021 on the ERC, which is more than the $26,000, almost $27,000 that they got for the PPP loan. So, and together, we're looking at a benefit of $63,000. That is a substantial benefit for any of us to be taking advantage of as we move forward with this. So, any questions on any of that? Alrighty. Because that's really all I got for tonight. I wanted to actually have a chance, to go through an example with you and field any questions that you might have moving forward. I will, be taking this recording along with the spreadsheet and posting it on that same section, that financial info section of our COVID-19 part of the website. So if you want to go back to it and take a look at it, it will be up there for your reference. All righty. All right, good enough. Well, thanks for being here and taking the time to learn a little bit more. As I said, I'm hopeful that it was helpful. We'll just kind of keep on moving forward. And if you have any questions as you're moving through this, as always, you know where to find me. I'd be happy to help walk you through it. Okie doke.
Phyllis, I have one, this is Mary again. I have one more question. How helpful or how much help can we, I don't deal with them directly, can we anticipate from our payroll service? How much will they help us with this?
Well, as I said, by the time you get to them and you've already got your amount calculated, really what you need their help in, which they should be very well equipped to do,
I would think.
is help you amend your 941 forms.
Okay,
To be able to actually get the money back.
okay.
2021, you wait until after the quarter is over to file for the amendment, or if we give them the data.
Yeah, I'm glad that you brought that up. Thanks. Because one of the things that you can do, and you're allowed to do, is to actually use the credit as you're going along.
Mhm.
So as you're working with your payroll company, you could even use your credit to basically to forego your federal tax deposits.
Okay.
And so normally what they'll do is they go through their calculations, and then they'll withdraw a certain amount of money from your bank account to cover your payroll tax reports. And you can actually have them, if they're aware now that you're going to have this credit, you can actually have them suspend your federal tax
Yeah,
deposit.
that's what I was thinking. If they, going forward, if they could just not submit the amount, and then especially if it's a case like this example where your tax liability was less than the credit anyway.
Right.
Yeah, it just foregoes having to have that cash flow out that you're going to get
Right.
back later anyway.
Yep, that's and thanks for bringing that up, because I forgot to mention that. I've been so focused on sort of the retroactive stuff that, when we get to the point now, you're in the second quarter. So if you're calculating this amount, and you've got a credit coming, you can tell the payroll company right away and tell them to, basically, as I said, suspend any further federal tax deposits, and then just use the credit, to offset the taxes that are due. And then again, as with any quarter, you have the option, I believe, at the end of any quarter to either request the money back, as a refund for that particular quarter, or you can push it into the next quarter.
Yeah, credit. Well, that's even more if you credit it forward, then again, that's doing the same thing. The liability, you'll get a credit against any liability you have anyway.
Right. So then in the third quarter, you wouldn't have to make any federal tax deposits, push the remaining credit into the fourth quarter, and you probably still won't have to make any federal tax deposits. But then as of the end of the year, you would be eligible for a refund for whatever the excess was. So, and again, as you guys go through your own calculations, I'd be really interested if if you're you have the time and you think of it, if you can just send me what this looks like when you actually do yours. I'd just be really interested in knowing how it's working out for folks. So that would be great. All righty, very good. Well, again, thanks so much for being here, for your attention to this, and I will let you go to have a wonderful rest of your evening.
Okay. All right. Thanks a lot.
Great.
Thank you,
Thanks a
Phyllis.
lot. Take care.
Thank you.